Okay, 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 okay. Welcome you one, welcome you all once again. Uh, we are just going to have a short review on how you can what you can timing your entry on VIN 75, especially VIN 75 or all the indices. How you can what timing your entries because you see that I made an entry. I made entry around around this area. I made entry around here, and I'm still running. I'm still holding my positions, and we are now here. So from here, if I'm using even 0.001, I could make getting to $40 right now. I'm going to show you how we go about it. How you can also get a very tight entry like that. Since we're in my free page, you have to also get something because at first I was doing it for free. But I can see that most of you are not taking it serious. But if you pay something, then I'm going to see the serious people so that I can work with them. Okay, what mostly I do is that before I take a certain entry, I must first able to identify what my directional bias. When we say directional bias is the main trend. It's either the downtrend or what the uptrend. The directional bias is the major trend from the higher time frame. Either what the downtrend or uptrend. And we having three types of what market condition. The first question, I'm always asking the question, like asking myself some questions before I took a trade. I first have to ask myself that what's the nature of the market? Like, is it in the trend? Is it in the uptrend or downtrend? Is it consolidating or is it choppy or is it in a channel form? Before I will take a certain trade. So what I do is that if you look at the chart from even weekly, here is 8 hours time frame. Let me go to daily time frame. If you go to the daily time frame, we can see it clearly that many of you don't understand the reason why um I'm recently looking to buy VIX 75. Recently, I'm looking to buy VIX 75, or I'm even still buying it. I took a sell trade here of I took a sell trade here. That's this area, around this area. Yeah. I sold VIX 75 around here. That's last week. Yeah. I sold here and I took my profit around this area. I was targeting this area with the aim that price will come and kiss this low keys before it will. You see that price able to kiss that area, but before price was getting there, it take a certain days or it take a certain time, a long period of time before hitting here. So I feel panic and I close my profit, my entries around this area. The reason why price always acting around this area is that we call this one liquidity. You see that from the higher time frame, we are in what? In an uptrend. We all see from the higher time frame, we are in what? Uptrend. Many traders are looking to sell. Many traders, those who are using indicators, they are still looking to sell this type of market. But price action traders, those who trade multiple time frame from the higher time frame to the lower time frame, are more will look for what? Buy entries at this point. Reason the formation behind is that from the higher time frame we are in what? And we are in an uptrend. Before we can say that we are in a downtrend until the price, unless we get a breakout, sorry, unless what? We get a breakout, or we get a breakout here. If price able to um if price able to what? Fall to this point, break this one, and able to come back and test the same area and give us a higher highs and higher lows. If price able to give us something like this, then all the price action traders will be looking to what? Sell. For here, all the price action traders are looking to what? To buy. But indicators, if you are using moving averages and then MACD and then stochastic and so on, definitely the indicator will tell you to what? To sell. Indicators will tell you to sell. Why? Because if you go to 1 minute, 1 hour time frame, the moving averages, the indicators are still trading below the moving average. That's 200 moving averages and then 50 moving average and 20 moving average. That those kind of indicators are still trading below, and the formation behind those kind of indicators are always saying that you should sell when the market trading below, and you should what? Look for buy when the market is trading high, trading above. But here you can see clearly that price is what? Is in an uptrend. Price is what? We are in an uptrend. So we are not going to what? We are not going to sell around this point. So the reason why we are buying right now is because of what? The directional bias. So let's say you got something like this. You got the directional bias. So your aim is what? Looking to buy. Now you have let's say the price as what? The price is in your interest zone. You were waiting for the price to hit your area, and price able to hit exact area and is now in your interest zone. So what you do is that if you want to look for um if you want to look for a buy position, we don't sell on a daily time. We don't use daily time frame for making entry. Our entry rule is start from what? The time frame, 30 minutes time frame, 15 minutes time frame, and a 5 minutes time frame. The 1 hour and the 4 hours, we look for structure. So we ask yourself the structure, the nature, and then what? The directional bias. The directional bias starts from where? Daily time frame, and then what? The 4 hours time frame. That's where we look at the directional bias. So looking at this one, if you go to 4 hours time frame, you can see that the price still in an uptrend. The price is still in an uptrend. Can we see that? You can see here that the price is still in an uptrend. So all this one is just a retracement. There's one thing you need to note. If the price, let me show you something here. There's one thing many traders don't know. Whenever price in an uptrend, price move in a certain way that, and it move like this, the retracement, you're going to get something like this. So something you see a trend channel coming down. So something like this, you're going to get a downtrend on the lower time frame. If this thing if you look at this place, if you look at this one here, you can see that if you go to the lower time frame, you will get what? You will get downtrend. You will definitely get a downtrend here. So something like this, we don't trade. We don't change a trend like this. But what we do is that we wait for, because looking at this one, you may definitely market may, if price able to break this key level here, it will surely continue the uptrend, and it will come back and test this zone and continue the uptrend again. If price able to break this liquidity here, it will surely go up, it will surely continue the uptrend. So whenever you see the retracement, you surely get a trend. And this kind of trend, we don't change, but we wait for strong momentum to the opposite side before you what you place a trade. So you get something like this, and the retracement is going to be like this, something like this again, before you get something like this. If you go back and read your chart, you will definitely see the same thing doing it everywhere. Look at here, it's happened here again. The same thing happened here again, going doing like this, and later on it pushed up strongly and happen again, doing like this. Later on, push up a strong momentum. So if you see something like this, just put your mind that it's taking a retracement, and that kind of trend, we don't what we don't place a trade, we don't trade. You are only, and if it applies in an uptrend, we only looking for what? We only looking for buy entry. And if it is in downtrend, we are only interested in what? Down selling opportunities. If only you know what you are doing, then you are going to look for what? The sell opportunity, something like what I did, because I knew that from the daily time frame, price is what? Getting a retracement. So if the price is getting retracement, before I involve myself on this kind of sell movement, I'll switch my time to lower time frame, something like 30 minutes time frame or 15 minutes time frame. I'll go to 30 minutes time frame or 15 minutes time frame to look for what? A very tight entry, with the aim of what? Reading an entry, not reading the structure and not reading the directional bias. I know that the rare directional bias is what? In an uptrend. We are in a hot uptrend. Let me do it. Oh, sorry. Let me just, guys, I'm sorry. I'm sorry. Okay, let me. Oh, I'm very sorry. Okay, thank God. Please, can you see my chart? If you can see my chart here, if you can see my chart, please type hi. If you can see my chart, please type hi. Okay, thank God. Let's continue. So when you go to the lower time frame like this, either 15 minutes or 15 minutes or 30 minutes, what we do is that something like this. If you look at price formation right now, you can see it clearly that, let me go to 30 minutes time frame so that it should be clear for us. Okay. Right now, what we can see right here is that we are what? We are anticipating what? Higher highs and what? Higher lows. Look at here. It pushed a high, low, high, low, and then we having what? A high here. So if you want to involve your, let's say you now you have now what? Joined that, you have now opened your chart, and you know that you already having your directional bias, the structure and then the nature, and you came to your entry areas. So what you do is that you just mark that zone. You have to what? You have to what? you have to able to what mark those kind of zones. Look at here. You have to able to what mark this zone out with the aim that if price able to what, because you don't need to get involved right now. If you are now opening your chart and you see price pushing up like this, we don't place trade. Our aim is what? We buy. You have to put this one in your mind. We buy at a lower price and we sell at a what? At a higher price. If you look at this one, now we have, if price break a certain zone like this, we consider it it is already in a high price, and we don't sell, we don't buy at a higher price. So if price is already in a high price, we don't what? We don't buy. Only if you're a price action trader. Indicated traders, your indicator will tell you that buy right now. But if you're a price action trader, we don't buy here. Why? Because we price action traders consider the price is what? Already in a high. The price is what? Already in what? In a high. So what we do is that we wait for price to give us what? We wait for price to create a low before what? We join the trend. So we are expecting price to push higher, that it will come back to this key level before we join the trend. Before what? We can what? Join the trend again. So your buy entry will be what? Um, your buy entry should be what? Around this area. Your buy entry should be where? Around this area, and your stop loss should be what? Below this key. So we definitely, price will definitely push up, and it will definitely come back and test this area. It will come back and test this area. If price fail to test, if price fail to come back and test the zone, we don't change, but we rather do another setup. We rather what? Do another setup to look for what? A different area for what? The entry. We don't change. We don't say price is going high. Let me join the trend. Because looking at this one, you see that price is shorting west right now. So if you change the trend, if you change right now, price will reverse on you. And let's say if you are using $100 account and you place 0.0005, you will definitely blow your account. Within short time of period, you blow your account. But what you, if you're able to wait and place your trade around this area, what you risk, it should be what? Maximum be what? $5, either $5 or $7 that you may what risk around here. If you place your trade around here and you put your stop loss, if price able to hit your stop loss, it will take you either $5 or $7 or maximum of $10, and you are what targeting this area for what? Your TP. So you have to what? Always reward your ratio. Your profit should be what? Higher than your losses. Don't risk 50% of your capital and getting 1% of your capital. It's very bad. We don't trade like this. You have to exercise patience. If price is in the consolidation, we don't trade. If price in the consolidation, we don't trade. Before you trade, wait for breakout, retest before you enter position. And we have types of the trading right after the breakout is a different strategy, and trading after the retest also is a different strategy. We combine all them together, making one powerful strategy. We have on the way, there is what do you call it? The order block trading. If it's only the order, if the price reverse on the order block area, that's where you don't wait for retest. If price reject on the order block area, that time we don't wait for what? Retest. We place entry right after the price getting rejection so that we can ride the trend. And we place our stop loss below the order block the order block lows. Please, are we getting this? If you understand what I'm trying to explain, please type high. If you understand what I'm trying to explain, please type high. Or if you have any question, you can ask. Is there any question? You can unmute yourself. You can mute yourself. You can unmute yourself. Then you ask any question you want to ask. Do you have any question? Hello. Do you have any question? Okay. Innocent, do you have any question? Innocent, do you have any question? Abdullah, do you have any question?
Yeah, I don't have any question for now.
Okay. What do you call it? Blair, do you have any question?
No questions for now.
Okay. Who again? Young Cars, do you have any question? Young Cars, do you have any question? Okay. I hope we all understand what I'm trying to explain. If you understand everything, please type hi. Oh, sorry for that. But from now going, I want you to what able to exercise patience, because the market is always there. It's better to pick. It's better to what miss entry than what taking a big loss. And try to what if price not going on your favor, make sure you close your entries. Make sure you close your entries. For me, I don't actually looking at um the types of my the boy what do you call it, the kind of candlestick that has formed, either engulfing or the morning star, or even I don't look. All what I know is what seeing a rejection or giving me some structure that I want, or what I want to see. Innocent, if you have any question, you can ask right now, because the meeting will end very soon. Innocent,
Um,
okay, I'm
good
listening.
day. So with this structure you've shown now, so we can place a buy limit at this point you circled under this, if price is able to come to this rejection point.
Yeah, the thing is, what we do is that if you see right now, we know that now you know the prices in your interesting area. If price
Yes.
gets into your interest area, as soon as it gets into that area, you can place a trade and put your stop loss below. I
Okay.
hope you are getting me.
Okay. No, I'm getting it, but what I'm asking is this
Mhm.
point that you marked, that you circled,
Yeah,
that the price is expected to come down to this point before going
yeah,
back up again.
yeah.
Can we place a buy limit at that position and wait for it
We
to come
can
to that point?
place a buy limit here.
Okay.
But for now,
Okay.
it's not good for us to place a buy limit. Why? Because if you
Okay.
look at this movement, price is what shorten west. When I say price shorten west, meaning that buyers are trying to lose control here. I hope you are getting me.
Okay.
We don't have a very
Okay.
strong move. Before we can place a buy limit here, we have to see a very
Yes.
strong move to the upside. That one will
Okay.
confirm to us that the price is wanted to go up. But looking at this one, it's just an evidence. We call this
Okay.
evidence, and we don't trade evidence signal, because if you place a buy stop right now here, one candlestick
Yes.
can just reject and track your entry and continue going down. I hope you are getting me. So what we do is
Okay.
that we have to see a very strong momentum pushing up, then we will
Okay.
get another one coming down to here before it give us what
Okay.
confirmation. I hope you are getting me.
Yes.
Do you understand now?
Yes, I do.
Thank God, because um 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 before let me give you this thing before we close. Let me try to uh let me see if I can get this. Yeah. let's say you open your chart and you saw something like this.
Okay.
Price pushing what up like this. Before you can, what I mean is that before you can what place, right now it created what a high here like this
Yes.
one. Before you can
Yes.
set your buy limits,
Yes.
before you can set your buy limits around either this key level, this area level. This our recent higher high. So before we can
Yes.
place a buy limit here, we must able to see the momentum shift, like breaking too long like this. I hope you are getting me.
Okay.
Then
Yes.
meaning that if price able to reverse, it will surely come back and kiss that zone. And if it give us a kiss on that area, it will what get a
Yes.
rejection right after price hit that area. I hope you are getting me. But if
Yes.
price getting a shorting west like this, meaning that this one can be a bank trap. If you look at this place, if you look at this, you see that this breakout is not a very strong. I hope you are getting me. Buyers
Yes.
don't have strong to control the markets right now here. Please, I hope you are
Mhm.
getting me. So before
Yes.
you can what before you can place a trade, you have to get a very strong momentum shift before you can place a trade. But because here sellers can just came in and continue pushing the market down. Why? Because this breakout is just a bank trap. If you read my consolidation book, that's what caused the consolidation to form, you will get to understand what I mean here. It's just a bank trap. So if you place a trade, they will just reverse on you and take all your money away from you. So this kind of market, we don't trade. We don't what? We don't trade. Okay, I think it's time for now. So thank you all. May God bless you for joining me here. But if you don't understand anything, you can ask me on the page. I will get back to you and answer you. Thank you.
Okay. No problem. Thank you so much.
You are welcome.